Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Pitch International with me, Darius Anucauskas. Today's the 11th of December, 2023. So yeah, welcome everyone. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'll disappear from that little left corner and I'll be back in a bit. Okay, so now then, real Sashin Paul. Hi, good morning. I can see you there in the chat room. Thank you very much for tuning in. I really appreciate that. So yes, I hope you'll find this session useful. Now, before we go further, as always, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us. If you have any questions, you can always reach out to us. So now then, guys, let's jump into the charts. The first one I want to pick up here is Nikkei 225. So basically with this one, we are still kind of, we did push a little bit higher. That's fine. I mean, but we're still below a short-term tentative downside resistance line drawn from the high of the 26th of November. Now, my problem is that why I'm saying that this is a little bit on the tentative side is the fact that basically it depends how you're going to draw it. If you're going to draw it capturing this little high here and this high and this high, then yes, it's this way. But then if you draw it, to capture this high, the Wednesday's high, then it's a little bit of a more flatter one. So again, that's why they're both kind of on the tentative side, because we don't really have like clarity in this one. So at the moment, I'll keep an eye on this one, but of course, I'm not going to exclude the possibility that there might be a move towards this line instead. So just, probably I can keep those two on the chart for now, for the time being, and then we'll go from there. So long story short, in a way, I would say that there is an indication for some downside. Now, in general, of course, the market continues to rally. I mean, especially the European one, the DAX, I mean, then the US indices as well are kind of, pushing higher, but, Nikkei is a little bit on the lagging side. Okay, in terms of economic data this week, what could, for example, drive Japan? Let me just quickly double check. There are some, yes, of course, the Tankan numbers, which are coming out on Wednesday, if I'm not mistaken. Yep, correct. Wednesday. So manufacturing numbers. Okay, so that's going to be a big one. Keep your eyes on Nikkei, of course. And in terms of other economic data, Thursday is not much, but Friday, okay, the Jibun Bank services PMI and manufacturing PMIs were coming out. So, okay, so that's on Friday. But apart from that, not much data from Japan. So maybe it will just be vulnerable to what's happening in the Japanese yen, and the Japanese yen will be vulnerable to what's happening in the global market. And we do have some data coming out from other regions. So yes, let's check those out, of course. But first, before we go further, going back to Nikkei here from the technical perspective, look, I think that the better option here in order to consider a move lower is to wait for a drop below the 100-day EMA. And if we do get that drop, then yes, great. More sellers here could join in, and we could see a move towards that 200-day EMA. Initially, of course, the 32,000 mark, that's what we're aiming for, but then the 200-day EMA, that's what I prefer here. China 50. So, okay, look, I talked about this as well. I talked about a possible kind of falling wedge pattern here, but I said to you that, look, as long as we remain inside this pattern, then yes, we could still drift lower. So we did kind of move lower, but then we kind of recovered a little bit as well. So in terms of Chinese data, Wednesday, I think there's some new loans coming out on Thursday, the FDI. But I think the main one, yes, will be on Friday when we'll get the retail sales, Chinese retail sales, industrial production. So yeah, good numbers coming out on Friday for China. But I think in the meantime, they will. It will react mainly to what's happening in the US and Europe, I think. So yes, and I will get to US in a bit, but coming back to this from the technical perspective, my upsides last week I talked about my upside scenario, a break above this upper side of the falling wedge, and kind of yes, that's still the case here. That's what I'm looking at for the upside. For the downside, I need to see a drop below that 11,158 zone in order to go lower. ASX 200, so that one is moving so far so good. Because why? Because I said to you that, look, we might be in a rising channel pattern, and there we go. We kind of we tested the upper side of the rising channel, and we drifted back down a little bit. So I said to you last week, as long as we remain above the 7,174 territory, then yes, of course, there is a good chance for a move towards higher levels, towards the upper side of the rising channel. Now, the fact that we already tested that area, the upper side of it, then maybe a bit of a retracement here could be possible. But look, as long as we remain above that hurdle, above that 7,174, for now, I might redo that level later on, but for now, if we remain above it, then yes, I will continue targeting the upside. If we do start falling below that hurdle, then correction within the rising channel here would be possible towards the lower side of it, and then we'll go from there. The Dow Jones Industrial Average. I mean, looking at this madness, I would say it's. I mean, well, it's not as mad as the German index, but I'll get to that in a bit as well. But look, I said to you last week, I said to you, look, keep your eyes on this barrier, this 36,335 zone. I need to see a clearance of that in order to go higher. And so far, that area is providing strong resistance. Now, I would really like to see maybe a bit of a correction here at some point, because again, if we want to go higher later on in December, for example, at the end of December, then a bit of a retracement here could be nice. But judging by what's happening here on the Dow, it seems like we could start moving sideways a little bit here, and roughly between the 36,000 zone and the 36,335, approximately around there, guys. And then we'll, yes, of course, go from there. While we remain inside here, I'm not really going to do anything. Now, as you probably are aware, we do have quite a busy week this week. And do you know why? Well, I'll tell you, because we do, first of all, of course, the main event is this one. So we do get the the Fed Reserve interest rate decision. Now, of course, the expectation right now is for no rate hike, and most likely that's going to remain as it is. But what's on everybody's mind is like how the speech will go, because look, that interest rate decision is coming on Wednesday, and there's also the press conference half an hour after, and this is what people will be listening into to see, how much is the Fed willing to go for rate cuts now? Because I mean, at the moment now, everybody's like not even talking about rate hikes, because like judging from January, I mean, January will probably stay the same. Now coming March, it's expected to decline. So basically, we are expecting to see a drop here. At the moment, it's expected to be, the same. But look, the March projection for a rate cut is becoming like higher. Then May, yes, it's now the main one. So basically, they're expecting like a 25 basis point cut in May, and by mid-June another cut, if I'm not mistaken. Yep, there we go. So another cut is expected. And so basically by the mid-June, by mid next year, we are expecting two cuts. So next year, how many? Like 8 meetings? Yeah, we have 1, 2, 3, 4, 5, 6, 7, 8. Yep, 8 meetings. So that's how the year will look. I mean, probably for traders and who are monitoring this, the Fed, the year kind of gets divided in 8 sections in a way. But look, I mean, I'm not saying that everything circles around the Fed, but but of course that plays a big role. Just bear with me one moment. I need to have a drink of tea. Oh, there we go. So, apologies for that, guys. My voice is not feeling very well. Or should I say my throat is not feeling very well today. But anyway, so coming back to the indices here. Look, from the technical perspective, yes, if we do pop and stay above the 36,335 territory, this will confirm a forthcoming higher high. And we could see a drift lower if we do see a drop below the 36,000 mark. And that's what I'm going to go for. Now, what's interesting, of course, is as well that on Wednesday we do have the Fed decision. But on coming Tuesday, what we have are the U.S. inflation numbers. So that's going to be very interesting to see how those come out, because at the moment the forecast is kind of to remain almost the same, maybe even for a month-on-month figure on the core side, it's expected to even increase. So yes, that's where the tricky bit comes in. So if the inflation numbers come out higher, let's say, than the forecasts, then the Fed is in an interesting spot. And then for sure everybody will be listening for the Fed, because the Fed, they stopped talking about rate hikes, but now they are talking about rate cuts. So, how will that go? Will they actually go back to the idea of, you know what, inflation started picking up again, let's go for some rate hikes? So yes, that's going to be the interesting bit, I would say. So yes, keep your eyes on Tuesday's data. That will be for sure a market mover. And let's say going into today, maybe we won't have much action here in the Dow. Maybe we'll stay somewhere in here in this little range, and we'll wait for tomorrow's numbers to come out. So the S&P 500 very quickly on Dow. And so yes, we broke from the technical perspective. We broke the downside line. From the fundamental perspective, yes, everything what I just said about the Dow kind of applies here as well on this one. And on NASDAQ, I'll get to NASDAQ in a bit. But judging from this, look, we broke the downside line. Okay, great. We are now looking at some higher levels. So basically, if we can clear this 4,607 zone right here, at the moment we keep on getting these false breakouts, but okay, that's fine. Look, I mean, not everything is lost here for the bulls. So if we do push, if we do push above that 4,607 territory, then yes, great. More buyers here could join in. So at the moment, also for you, something to keep in mind is that as long as we remain above this downside line, then yes, this continues to keep the upside scenario on the table. In terms of the downside scenario, well, not only that we need to see a drift back below this downside line, but also a break below this 4,545 level. Now, some of you might say, but hey, Darius, what about the a possibility for a range? So let me just draw this box right here. So yes, I mean, if that's the case, well, that's a good one in that case, because if you're looking for some lower levels within the range, then I would say keep your eyes on that downside line. If we fall back below it, then this could open the door towards some towards the lower side of this range. But yep, at the moment we have to be careful. Like I said, keep your eyes on the upper bound of the range here. Let's see if that one can continue to maintain the bulls lower. But if it cannot, then a nice good break above it may attract more buyers. We could aim for that current highest point of this year, near the 4,634 level, and then we'll go from there. That's not the all-time high. The all-time high is a little bit higher. So NASDAQ. Okay, this one is tricky. So, okay, look. We do have a level here, right? That's the all-time high on NASDAQ. And this area, let me just scroll back here. This area is around the 16,750 territory. Yes, if this territory here, gets violated, of course, certainly a new a new all-time high will be set. But for now, I am looking at this picture here because this is, for me, very, very interesting because we are trading above this upside support line drawn from the low of the 26th of October. So in a way, there is a chance still, for this index to push higher, and you can see it's quite reasonable. But at the same time, we keep on hugging this previous highest point of this year near the 16,062 territory right here. And yes, it seems like we cannot really move away from it. So we need to see a stronger move above that area in order to go higher, in order to go further north. So that's my game plan here for the upside. For the downside, actually, I think I'm going to stick to the same level. A drop below the 15,718 zone right here would be required in order for me to start shifting a little bit more to the downside. So basically, this little hurdle here, I need to see a break of it in order to go to the downside, and that's the highest point of September of 2023. The German index, DAX. So this one is an animal. Honestly, this continues to rally. This continues to push higher, and I don't see stopping anywhere. But look, in general, the idea worked nicely. I said to you that on when was it? On last week, yeah. Well, last week, yes. On Friday, I think I talked about this one as well. So I said that as long as we stay above the 16,615 territory, there is a good chance for a drift higher. But and yes, that happened. We went further north. We do have an all-time high, basically. Yes, a new all-time high. So that's crazy. In a way, also, I kept on saying, I remember I talked about the whole Elliott wave idea, where I said that this is like 1, 2, 3, and 4, and 5. But the thing is that we don't have the fifth, and this is that's why I'm keep on saying it's very subjective. Don't really go from these Elliott waves like your 1, 2, 3, 4, 5 scenario and then ABC correction. Yes, they do happen, but it's very difficult to find out where it's gonna end. So that's why okay, will it now do the correction back? Will it now do the ABC pattern back down? I don't know. We'll see. But look, my downside scenario is going to be from this break of this upside line, and yes, then I will consider some lower levels basically. But at this point, we keep on entering these uncharted territories, and judging from this, this is just spectacular, guys. Let me just put the official rate on. So that's the yeah. So the etc. DAX pricing, but look at this. This is madness. We keep on rallying, and we're not stopping. So, look, I think that keep your eyes on the US data. I think that will impact the German index. In terms of European stuff, in terms of European economic data, we do have the ECB, but it's the let me just pull it up here. So on Thursday, yep, we do have the interest rate decision from the ECB. Together with, on the same day, we'll have the BOE as well. So we'll have first the BOE, Bank of England, coming out with its interest rate decision, and then on Thursday we do have the interest rate decision from the ECB. So basically Wednesday, the Fed, Thursday BOE and ECB. So most likely those two, the other two, will kind of follow what the Fed will do. So, you know, no surprise there, but yeah, but let's not rush into things, guys. If you're not comfortable with, let's say, you're not comfortable with the, let's say, trying to predict the future, I honestly suggest you not to predict the future, because wait for the numbers to come out. We will get the market reaction, and then we can go from there. So long story short, the German index here might have nice movement on Thursday, so keep your eyes on that. And in the meantime, I'm very curious what's going to happen here further. Maybe ideally it would be nice to see a bit of a correction here back down. That's normal. I mean, looking at this picture, we are way too overbought in a very short period of time. Again, a bit of a correction here could be nice. So let's see if that's going to happen or not. So ideally, like I said, I would like this to go back below the 16,615 territory right here, which is the previous all-time high. If we can get that, great. I will consider a larger correction to the downside. So speaking of interest rates, as I said, BOE is coming out the same before on Thursday before the ECB. And coming back to the technical picture, which I've mentioned to you last week, and I said to you guys, wait for that pop above the 7,535 territory right here, above that 200-day EMA, and then we could go higher. And there we go. Look, we pushed nicely to the upside. That's wonderful. We didn't really come close to testing this downside line. I would say still a bit of room. But I would say this way, as long as we stay above the 7,535 territory, yes, I will continue targeting the upside. In terms of the downside, a break of the lower side of the rising channel here would be nice. US dollar index. So this one, last week we had a bit of a roller coaster ride here. We pushed lower, we stayed above this upside line. So in a way, there is a chance for the bulls to come back here and drag this one higher. But in the meantime, I think if we do get that pop above the 200-day EMA, then yes, great. More buyers here could join in, but I'll keep an eye on the 50 and the 100-day EMA. That's something that I will be keeping a close eye on. And if that gets cleared, certainly, yes, more buyers could join in. So long story short, I would say this way that as long as we stay, or let's say, as long as we push above the 200-day EMA, that would be the first step for examining higher levels. And then, of course, the other EMAs that I'm keeping an eye on, and in order to go higher, I need to see a break of those too. For the downside, now this is where I will adjust a few levels here. I think that's required. I think that maybe this is the one to keep an eye on, the 103.82. It acted as a good area of support and resistance in the past. So yes, basically a break of this upside line and a drop below the 103.82 territory might do the trick for a few more sellers. Gold. So gold fell below the 2,000 mark. There we go. It is working out nicely according to the plan. I talked about gold last week on Monday. I have drawn this chart here, and if you want to check it out, you can check out my analysis here that I've done. Picked up quite a few views, I would say. So yes, wonderful. I can see all the comments there. Thank you very much for all the comments. Really appreciate that. So look, this, like I said, so far is working out. I talked about this, so basically I'm kind of leaning towards lower levels in a way. And yeah, if we do kind of stay below that 2000 mark right now, then yes, certainly more sellers here could join in and continue driving this one lower. Now, my only little issue here right now with the downside is that we have this 50-day EMA, but judging from the past here, I think it really liked the 100-day EMA more. So in a way, there is a good chance to see a move towards this territory, this 1964-65 zone, which is, yes, the 38.2 here on the Fibonacci extension. So yes, we might test that one. Perfect. I mean, good potential target. So that's what I'm going to be targeting for now. But initially, I'm aiming for that 50-day EMA, and then we'll go from there. If we can clear that, then yes, my next target is the 100-day EMA together with this 38.2% retracement on the Fibonacci extension. In terms of the upside, if you're looking for some higher levels at the moment, I am struggling with that, because at the moment, I mean, it's really only to the downside at the moment, because if somehow it rebounds from this 50-day EMA, then maybe, yeah, maybe. But now, look, I mean, I will consider some higher levels at this point in time. I will consider some higher levels if we push back above the 2040 zone, and then we'll go from there. Silver is, yes, drifting nicely, so this worked out perfectly. I'm not even going to say anything else apart from, yes, it worked out perfectly. So we did drift, yes, lower here. So, okay, look, that's fine. Nothing else to add. We fell below this highlighted zone, this 23.56 territory. So great. My next target kind of is this upside line, which we almost managed to reach, I would say. But if you have been holding, to this move to the downside, then congratulations. I think that you don't have to wait for a perfect test of this upside line. You can exit your trade now, probably just leave it as it is, always leave something for the next guy. So yes, maybe somebody will eventually drag this one lower here towards this upside line, but maybe after a little retracement back up towards these EMAs, and if those provide good resistance, then yes, another decline here towards this upside line could be possible. Copper, let's have a look at that one. So this one is stuck, but very interesting. It violated my trend lines, but I do like them, especially this downside one. Let me get rid of this upside one. So yes, in a way, we did drift lower. We did break below this downside line. So in a way, it created this downside scenario. But look, I would say this way: if you're looking for some higher levels, then you're in luck. There is still a good chance for seeing those higher levels, and as long as we remain above this downside line. So then we could target again the 3.86 territory, and if that gets cleared, certainly I will aim for the highest point of December, the current highest point of December, near the 3.93 level. For the downside, I think I need to take a very conservative approach, and I need to wait for a drop below these EMAs and below the 3.72 territory right there. Oil, jumping into oil. So yes, a rebound, good from this 69.70 territory. So now my question is, can we see a hold up below this 72.38 zone, which I previously looked at as a good area of support? So if we can stay below that hurdle, then yes, great. We could see another decline. Now, at the moment, like I said, it is tricky here. So let's keep an eye on this hurdle. Basically, that's my game plan right now. If we do remain below it, another decline could be possible. My upside scenario, well, from the very short-term perspective, certainly, yes, if we do push above this barrier, above that 72.38 zone, then yes, great. We'll aim for the upper side of the falling channel. But yes, for now, let's keep it as it is. Bitcoin, so there we go, beautiful decline, guys, and yes, of course, it has to happen. And to be honest, look, we saw some action to the downside. I think that the news came out, and let me just double check what happened here. So apparently there's something from the options sector Funding rates for major tokens, including BTC, have normalized to below 0.1%, indicating an exit of over-leveraged bulls. Okay, that's the kind of the headline that I'm seeing here. Bitcoin fell early Monday, validating the caution signaled by the options market last week. Okay, so that's right. Okay, so basically, costs have normalized. So maybe that the market saw this as a negative. Okay, let's see. Okay, from the technical perspective, basically it's working out nicely, because I said to you that if we do fall back below the 43,000 here zone, then I'll consider a larger correction to the downside. And to be honest, as long as we're going to stay below this hurdle, I'm going to do exactly that. I'm going to lean a little bit more towards the downside. Ethereum, similar story. Yes, drifted lower, and in a way, in one move, my target got reached. I said that if we do fall below the 2,300 zone, my next target is the 2,142, and there we go. We kind of reached that, and great. So what's next? Well, to be honest, I'm keeping an eye on this little short-term upside line, which is a little bit on the tentative side, but also I am keeping an eye on this upside line here as well. And yes, if we do continue to remain below this hurdle, below that 2,300 zone, then yes, certainly I will continue targeting the downside. And once again, I'll aim for this upside support line drawn from the low of the 3rd of November. In terms of Ripple, something that continues to kind of sit very quietly, because again there are ongoing SEC cases against Ripple. So yes, we'll continue watching that one. So look, for now, I mean, what I can see here is that if we do fall below the 0.6296 territory right here, then yes, great. We could see a little bit of a move lower here, especially if we do fall and stay below the 50-day EMA. So that's what I need to see here. I need to see a drop below that hurdle in order to go lower. In a way, I'm somehow leaning towards the downside, to be honest, but again, I'm not rushing into things. I want to see, like I said, if we can get that move below that 50-day EMA. In terms of the upside on this one, well, I think that the better option here would be to wait for a pop-up of the psychological 0.70 territory and then go higher. Again, depending on how we're going to trade here, but at this point in time, that's my scenario. Let's jump into Forex now. So certainly AUDUSD, the first one to watch. And let me just double check something if we do have anything from Australia. So this morning there was nothing. On Tuesday, nothing else. NAB business confidence. Yep, that's coming out. On Wednesday, it's quiet. Thursday will be employment numbers. Yes. So, and also the RBA bulletin coming out. So we have the unemployment number coming out from Australia and the RBA bulletin. So yes, so the main action could come on AUD, for the AUD specifically, that would be on Thursday, but because it's AUDUSD, so guess which other market will influence this pair. So that's, of course, yes, the US dollar fluctuations will be watched carefully. And for now, we are stuck here. We're stuck between the two trend lines. And I said to you that I'm going to take a very conservative approach, and I'll wait until we can clear one of the sides here, and then it will be a little bit more attractive for me. But at this point, it's just kind of, it could just bounce around. So I don't want to really get kind of screwed over at the end of the year here with this pair. Rather wait. AUDJPY, beautiful test of this upside line, beautiful rebound from this upside line. So now the question is, can we see a move a little bit more, let's say, back to the upside? Well, I'm not rushing into things, because for me, the upside scenario will be from around here, from around this 95.83 territory. If I can get that push back above it, then yes, great. More buyers here could join in. We could target the 50-day EMA or maybe even higher. In terms of the downside, yes, a break of this upside line is required, and then we will go from there, guys. So at this point, I am just waiting. While we remain in here, I'm just observing the price action. USDJPY. So again, this is working out nicely. Look, I talked about this. I said that if we do climb back and above the 200-day EMA and stay above it, then yes, there is a chance for a larger correction to the upside. And so far, I'm going to stick to that. I'm going to aim for the 146.23 territory, somewhere around here. And also, of course, this downside line drawn from the high of the 14th of November. Now, if this downside line gets broken, then, well, guess what? This may attract a few more buyers and we could see a nice move higher. But at the moment, we're still below this downside line, so the trend is still to the downside. Of course, like I said, keep your eyes on the data this week, the US data. We do have a bunch of it coming out, so yes. Also, I forgot to mention that on Thursday, on Thursday we have retail sales together with the initial jobless claims. So on Thursday we will get the also from the US retail sales figure. So basically we have quite a busy week. Yes, on Friday it's kind of not much, to be honest. I mean, just S&P Global Services PMIs, the preliminary ones are coming out, so those are expected to go down a little bit. But okay, look, the main focus right now is on inflation tomorrow and the Fed on Wednesday. USDCAD, so we're still flirting with that 1.36 zone. But looking at this picture, it seems like it's forming something of a bullish flag. So maybe that could work out. But again, if you're looking for some higher levels, then yes, certainly a push above that 1.36 territory is required. And also a push above the 100-day EMA is needed too. Now, in terms of the downside, a drop below the 1.3545 territory is required here as well. And if we can get that drop, then great, more sellers could join in. Because at the same time, we would fall below the 200-day EMA. So basically, yeah, good potential area right there for a breakout to the downside. USDCHF, beautiful hold up near this downside line. So in a way, mission accomplished, because I said that if we do push above this highlighted zone with the 0.8760, if we climb above it, then yes, I said that my next target is this downside line. But now I'm examining that downside line as being the barrier for the upside, if we can break that, of course. If we cannot, then a drift back down could be possible. However, I will get more excited with the downside if we do fall below the 0.8745 territory right here, and then we'll go from there. GBPUSD, looking at the picture here, GBPUSD is yes, it's how to say it, it's still balancing above this upside line. So we did get a drop lower, that's fine. So look, I had this analysis done here on our page. Basically, I'm kind of expecting maybe a decline, if this upside line provides good support, then a rebound back up here could be possible. So yes, if this upside line gets broken, certainly yes, then lower levels could be met. So yeah, that's kind of it in terms of GBPUSD. To be honest, there's not much to say. I mean, we had this double top, a small little double top, broke the neckline, moved lower, and I think that exactly where this upside line is, that's enough for the move, for the calculated move here, whenever we have a double top here. So it's almost kind of the same size most of the time. So on a break of the neckline, we tend to do the length of the from the neckline to the head, but and we tend to do the same kind of size, but sometimes it's let's say around 0.7. So basically 70% of this distance. So sometimes that can happen. So basically, if you're aiming for just 70%, so you're kind of winning. If it goes a little bit more, okay, that's fine. You know, if you still have some positions open, but just to kind of let you know that yes, Roughly, it's something like that. GBPCHF. I talked about this one last week, and there we go, guys. We broke the downside line, but of course, before that, we have rebounded from the lower side of the possible range here, and okay, that's great. So everything's working according to the plan. So I'm kind of leaning a little bit more towards the upside, to be honest. But for that, I need to see a pop above the 50-day EMA, and then I'll target the 100-day EMA, and then the 200-day EMA, and then I'll take it from there. For the downside, a drop below the lower side of this range is required, and then we'll go from there. That's my simplistic approach here. I mean, it has not changed since last week, so I'm still sticking to the same game plan. EURJPY, there we go, beautiful rebound, so that's fine. But look, as I said to you before, as long as we stay below this downside line, then there's still a chance for a drift lower. But I think at this point I will aim lower if we do fall below the 200-day EMA. If we can, yes, if we can drift below that, wonderful. I will target this hurdle, that hurdle. So yes, if we do fall below the 200-day EMA, then yes, my next target is the 154.37. That's the lowest point of October. And then the current lowest point of December could be the next target, the 153.16. And then we'll go from there. For the upside, yes, a break of this downside line is needed. But also, I think that what I'm going to do is I'm going to keep an eye on the 100-day EMA. If we can clear that one, if we can jump above that, then yes, I will go higher. EURCHF. EURCHF is, yes, quite an interesting one and two, because look, I talked about this and I said that if we had a decent move lower, we did the 23.6% retracement on the Fibonacci. That's great. Actually, you know what? Let me just adjust this very quickly, because it's left. There we go. I think that one, yeah, this one's a little bit easier to view. So we did the 23.6, and now it seems like we could go back towards that 38.2 or even the 50% retracement on the Fibonacci. So that's going to be my plan right now, as long as we stay above the 23.6. If we start falling somewhere back below the 0.9445 zone right here, then yes, I will aim to the downside. And finally, EURUSD, of course, something that we will be keeping a close eye on, especially with the Fed, with the ECB. I mean, so expect some volatility in the euro dollar this week. So at the moment, it seems like we're just oscillating around the EMA. So we're just on a pause here. But if we do drop and stay below the 1.0756 territory, then yes, I will go lower. In terms of the upside, a push above the 1.0831 territory right here could do the trick for a few more buyers. So basically, if you're looking for some higher levels, then wait at least maybe a push back above this hurdle, above this area right here, the 1.0831. But again, the problem here is that we do have some other barriers, so it's not really like nothing is guaranteed. So you know, it might give us a pop, but also could give us a false breakout. So just, you know, position yourself correctly and carefully, and always have your stop losses in place, because again, you know, it's the market that we're dealing with. So it's sometimes it looks logical, but unfortunately, you know, then it becomes very illogical, because something is hidden somewhere. So something that maybe we have not noticed. And look, but for now, the short-term trend seems to be more towards the downside, but overall, don't forget that we're stuck between the two trend lines here. So basically, a move lower. Basically, overall, it's kind of neutral. So, but it's just that given such a wide area, then yes, we have an opportunity to kind of maybe try to squeeze something out of this one in between these two trend lines. So guys, that's it for this session. I really hope you found it useful. Thank you very much for tuning in and watching this one till the end. I really appreciate that. Just to let you know, we're currently building something together here. Like we're preparing for like a webinar. Hopefully that's gonna go further with one of the other presenters here on TradingView. So you probably know him. But yes, I mean, that's going to come up in January. We're doing some preparations, but just wanted to give you a little heads up. So yes, guys, but I'll give you more information, like, closer to the date, but that will be somewhere in January, in mid-January. So yes, guys, that's it for this session. I hope you found it useful. As always, I wish you all the same thing. Stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And then, yes, I mean, but just be cautious of these events which are coming up this week. So thank you very much, and I'll see you tomorrow. Bye-bye. Uh-oh, you just broke a digital image cursing us all to 7 years of market volatility. Undo by subscribing to our channel.